The IMF projects a global growth slowdown to 3.2% this year, and Saudi Arabia's Sipchem sees 89% first-half profit growth. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. The IMF is projecting global growth to slow from 6.1% last year to 3.2% in 2022. This is a 0.4 percentage point decrease from its April 2022 forecast. Lower growth, reduced purchasing power, and tighter monetary policy drove a downward revision of 1.4 percentage points in the U.S. In China, lockdowns and the real estate crisis have caused a downward revision of 1.1 percentage points. Global inflation is anticipated to reach 6.6% in advanced economies and 9.5% in emerging and developing economies this year. Saudi-based Sipchem has posted an 89% jump in its first-half profit to $623 million, driven by higher revenues. Sipchem attributed the results to revenue growth of 28%, a drop in finance costs, as well as a higher share of profit from joint ventures. Revenues rose 27.5% to $1.5 billion in the first half, from $1.2 billion for the same period a year earlier. In the second quarter of this year, net profit soared 52.2% to $336.2 million. General Motors reported a big drop in Q2 profits due to the semiconductor shortage, although the automaker confirmed its full-year forecast amid strong pricing. Profits fell 40% to $1.7 billion as the automaker was unable to deliver more than 90,000 vehicles, which were unfinished due to missing parts. But GM says production in the second half would be up sharply. Meanwhile, GM has signed deals with LG Chem and Livent Corp to secure key raw materials used in manufacturing electric vehicle batteries. GM says it's now on course to produce 1 million EVs annually in North America by the end of 2025. Asian markets rose today as an Alibaba-fueled surge in Hong Kong provided a much-needed boost to sentiment ahead of earnings reports from the world's biggest firms and an expected Federal Reserve interest rate hike. Hong Kong led the way in reaction to news that Alibaba will seek a primary listing in the city. The over 5% surge in Alibaba gave a boost to other tech giants, with JD.com, Tencent, NetEase, and Bilibili all up. There were also gains in Shanghai, Sydney, Seoul, Singapore, Manila, and Jakarta, though Tokyo and Taipei slipped. Let's take a look now at today's Forbes RealTime Billionaires ranking, and today's winners are all based in China, with our biggest winner, real estate mogul Yang Huiyan, up $1.3 billion with net wealth of $13.2 billion. Our second biggest winner today is real estate billionaire Wu Juhan, up $940 million with net wealth of $12.2 billion. And our third place winner is bottled water mogul Zhong Shanshan, up $874 million with net wealth of $71.9 billion. Check out our website and our social media for all of the latest billionaires news. EU energy ministers reached an agreement today on how to cut their consumption of gas by 15% and reduce their dependence on Russian supplies. It came during an extraordinary meeting in Brussels after Russia's Gazprom said it would reduce its gas supply to Germany to 20% capacity starting tomorrow. At the meeting, France said showing solidarity to Berlin would help all of Europe, even though Germany took a major share of the 40% of EU gas imports that came from Russia last year. Staying in Germany, Lufthansa says it's canceling more than 1,000 flights ahead of a one-day walkout by ground staff scheduled for tomorrow, just as families across the country head off on their summer holidays. Strikes and staff shortages have already forced airlines, including Lufthansa, to cancel thousands of flights and caused hour-long queues at major airports, frustrating holidaymakers keen to travel after COVID lockdowns. Germany's flagship carrier has canceled 678 flights at its Frankfurt hub, most of which were scheduled for Wednesday, and 345 flights at Munich. Meanwhile, EasyJet says disruption caused by staff shortages on its aircraft and in airports cost it $160 million in the 3 months to end June. But it says operations improved in July. The British low-cost airline says it's taken action to build the additional resilience needed this summer, and the operation has now normalized. This comes after the group reported a headline loss before tax of $136.6 million for the quarter. French satellite operator Eutelsat has inked an MOU to merge with British counterpart OneWeb and create a global champion in broadband internet. Eutelsat and OneWeb will each hold a 50% stake in the combined firm. Satellite broadband promises to bring coverage to the most remote areas of the planet by doing away with the need for antennas and other infrastructure. I'm Ramya Faraj. This is the Daily Brief. Thanks for watching. See you tomorrow.